So, what's happening with markets at the moment? If you haven't seen already, about 3 or 4 days ago, markets started to drop, and they started to drop pretty heavily. And over the last week, we've wiped off nearly all the gains that we had from about November last year. So, what has done that, and what's actually the problem? So, it's really a major bit of throwback to a bit of post-traumatic stress disorder coming from the global financial crisis. And something that's happened is something called a bank run. And we saw this happen with a cryptocurrency holder and a cryptocurrency trader, stock platform. And what we're seeing that now is with a major tech bank called Silicon Valley Bank. Now, if you're a client of mine and you haven't already and you're watching this video, please like and follow us. Would love to have you get all our stuff instantly on socials and have you communicate directly with us through socials if you like. So please like and follow us. And if you aren't one of our clients, would love for you to do the same, so that way you can get some really good quality, unadulterated, no bullshit news on what's actually happening, what it means for you. So this video is going to cover off what it actually means for you. I think it's really important for you to know what this actually is going to have as an outcome for you as a person, without getting through all the glorious headlines and all of the argy-bargy that tends to happen with a lot of news media. The other thing is what's actually happened, what does it mean, and really what are the likely outcomes and what you should do about it. That's the major thing, is what is it that you should be undertaking at the moment to make sure that you're securing your position and growing your wealth and those sorts of things. Because at the end of the day, that's what I'm here for, and that's what we help our clients do. So let's get started with what it is. Ultimately, it's something called a bank run. It happened to the 13th largest institution in the US at the moment, called the Silicon Valley Bank. And a bank run is effectively when a whole bunch of people need to take or want to take their money out all at once. And in this instance, people got spooked. And they had a situation where the Silicon Valley Bank needed to cover off a number of their losses that have happened through rising interest rates. And so they started selling off assets. People got wind of that, and people started saying, hang on a minute, I want my money. And when everybody starts to say to a bank, I want my money, the bank starts to get into a whole bunch of trouble. The reason being is that the bank doesn't hold every dollar that you have in there, that you've deposited in there, in cash in a vault. We've moved beyond that banking system. And what it means is banks will invest your money, they will lend out your money, and sometimes in order to cover off minimal cash amounts, and sometimes in order to cover off what they need to hold as a minimum in their bank, they need to start selling off assets. So that's exactly what happened. Now, the reason why people are getting really upset about that, and the reason why it's causing a whole bunch of drama, is really because they're not sure whether or not this is going to be a contagious issue. And there's a lot of rickety movements at the moment happening in markets, where banks all around the world are wondering if there's going to be another bank that starts to domino and starts to flow on and those sorts of things. As people become more and more spooked, they're wondering if it's going to happen to another bank, if it's going to happen to their bank. And what we can start to see, which is what started to happen in the global financial crisis as well, is we start to see bank runs across the board, where people are starting to try and take more and more money out, and the banks are having to sell assets at a loss and those sorts of things to cover their positions in an alarming rate. Now, the good news is that so far, it doesn't look like that's happening, but we won't know for sure until maybe the next few weeks, could even be a couple of months before things start to get a little bit more on solid ground. Now, if it doesn't catch on, if it's not a contagious thing, if it's not something that is going to affect other banks, then there shouldn't really be too many dramas. And most of what we've seen fall off the markets should pick up pretty nicely and come back into the markets over the course of the next little while. If it does turn into a contagious thing and we start to see other banks domino and they start to fall down, depending on their size, which, this is a pretty big bank. If it's something of a similar size or bigger, we're going to start to see some big problems, and we're going to start to see some big movements in markets. And the reason being is people who have that post-traumatic stress disorder, those flashbacks to the global financial crisis where asset prices dropped by 35 to 40 odd percent, and banks needed to be bailed out and those sorts of things. And it's really important to keep in mind that this is the biggest bank failure of this kind since the global financial crisis and the Washington Bank that collapsed then. And that was really the catalyst for the 2008 global financial crisis. So that's what people are worried about. That's what's going on. Ultimately, with anything to do with the markets, and one of my favorite sayings is, when it comes to investment markets, nothing is usually as bad as or as good as they're saying it is. So we're not going to know exactly what's happening for another little while. And quite frankly, I don't think you should be way too concerned about it. There's going to be a lot of beat up in the media about this. There's going to be a lot of naysayers and doomsday people who always are predicting market crashes. We are going through challenging markets. There is no doubt about it. But ultimately, I don't think this is going to be a major contagion. Now, that being said, could be wrong. But ultimately, I have a very optimistic view of the markets over the course of the next 12 months or so. And if you're one of my clients, you'll know that my feelings are that the banking sector is actually doing pretty well and it's going relatively well. And the major issue facing banks at the moment is the complete ridiculous increase of interest rates that don't need to happen, because the issues facing them aren't actually the issues that they're addressing. So I don't think that the major risks are coming from this space, even though rising interest rates is what actually caused the losses on these investments. So what does it actually mean for you? So what you're going to see is your portfolio balances rising and falling and those sorts of things. And we're going to see some market volatility. I was hoping that this year would be completely free of market volatility and we'd be on the up and up, but we are going to see some market volatility. And ultimately, what should you do about it? Well, there's three things that you can do about it. One is that you can leave your money where it is and you hold on, you ride out the highs, you ride out the lows, and you continue investing over a long period of time. You take a non-emotional outlook to the investment markets, and you treat these investments just like you would any other long-term investment, like an investment property, where you hold it through the thick and the thin, and we have a long-term view. That's option one. Option two is that you panic, you go nuts, and you want to sell everything, or you want to reduce your position. This is not something I would recommend that most people do. The short-term market fluctuations doesn't mean that you should be panic selling and changing direction and those sorts of things. You should only be looking at reducing your overall exposure to markets if you need to fund income and those sorts of things, which if you're one of my clients, you normally have about 2 to 3 years worth of liquidity within portfolios to protect you against exactly this kind of thing happening and needing to sell down during periods of time like this. So I don't think that's the best thing to do. The third thing to do, which is probably the best thing to do if you can do it, is to look at the opportunity and figure out how we can actually put more money into investments whilst they have depreciated in price. So the Australian banking sector, for example, 3 or 4 days ago, nothing has really changed that dramatically for the Australian banking sector. And yet most of the Australian banks and the Australian financials and financial institutions, which are some of the largest players in the Australian stock market, they're down by 2.5% to 3.5%. If you can start to take advantage of these things, then that's probably a better solution than the alternative, which is to panic sell and those sorts of things. Keeping in mind good long-term income and that sort of stuff. So ultimately, we want to be able to start taking advantage of these. That's option number 3. If I haven't already reached out to you, advising you exactly what it is that you should be doing, then the answer is that you should be holding on. And we hold on to our seats, we take the good with the bad, and we continue adding money into these investments over time, which ultimately will reduce the overall cost base and provide a greater market return over the long term. So if you haven't already, I would love for you to hit like and subscribe. Follow us to make sure that you get this kind of video news and those sorts of things right into your inbox or buzz straight into your phone as soon as it happens. If you're one of my clients, the reason why we're putting out this video is to make sure that you're aware that we're on top of things. We know what's happening and we're informing you of exactly what's going on and what you should be doing about it. If you have any questions, please don't hesitate to let us know. And you can get us on hello@wealthyon.com.au, or you can give us a call on 1-800-577-336, or have a look at our website, www.wealthyon.com.au. It's probably also important to reference that we've got a couple of other articles that are relating to investments and the structural side of things. So I'll link them into the bio of the video or into the caption. Would love for you to check those out. And if you need anything, please don't hesitate to reach out and we can help you out where we can.